Hello and welcome to CMC Markets Weekly Trading Outlook for October the 26th, 2015. My name is Colin, Chief Market Strategist. Our topic this week is central bank meetings take center stage. It's a big week for central bank news, coming off what ended up being a very big week for central bank news as well. We've got the big decisions from the Fed, from the Bank of Japan, the Reserve Bank of New Zealand, and the Riksbank of Sweden, coming off a week where we had decisions from the Bank of Canada, the ECB, and a surprise move out of the People's Bank of China. So let's start with a quick wrap-up of last week, and then we'll go into the new week. So the Bank of Canada held interest rates as had been expected. It was 2 days after a federal election. No one was expecting them to move. The market response to the federal election result with a majority government was generally positive. The Bank of Canada did cut back its forecasts, and with soft inflation towards the end of the week, there has been a bit of a concern that perhaps the Bank of Canada may cut interest rates at its December meeting, where it does have the scope to do so. The ECB also came out with a dovish commentary. They indicated a number of things. First of all, that they actually were considering an interest rate cut and discussed one at this meeting. They indicated that they're looking at changes to their QE program, or their general stimulus program in general, for their meeting, which is being held in the first week of December. That could include an expansion of QE, an extension of QE, something new, or an interest rate cut. They're looking at a number of options. Street took that as very dovish. That ignited big rallies in stocks in Europe and sent the euro spiraling downward sharply and boosting the US dollar. Then on the Friday morning, we got a surprise move. It's always a surprise with the PBOC because they don't schedule announcements. That they went all in. They cut interest rates, deposit rates, and bank reserve requirements. So that was sometimes they've done one or two in the past. To hit all three on the same day, and they're pretty serious about trying to stimulate the Chinese economy. The good news about these were that they did. People felt that the moves to try and stimulate some of the world's struggling areas were seen as a positive. Commodities, however, saw them as a negative. Copper and crude oil sold off on the feeling that people asking the question of, well, gee, how bad are conditions if the central banks have to really step up like this? So we're getting a mix of the bad news is good news and the bad news is bad news trades, and it depends on what market you're in. So keep an eye on that as we move through the meetings and other economic news over the next few weeks. This week, we're now moving into a week where we're getting another round of central bank meetings, and we're also getting the first of the Q3 GDP reports coming out, with the US and the UK leading the way. So we're going to start to get a better idea of how did the world economy perform through the summertime. Was it as bad as the big summer sell-offs in stocks would have us believe, or was it not so bad after all? We'll find out in the over the next couple of weeks. So I'm going to start off with I want to start off with gold, and I want to talk about gold for a minute. Because what we've been seeing is here that with this dovishness and people looking to put more stimulus into the economies, more money printing, more paper money out there, generally speaking, reduces the value of paper money, increases the value of hard assets and hard currencies like gold. What did we see this week? We've seen with talk of stimulus that gold has been rallying through October, but you know what? It's starting to come back off. Now, part of this was because capital went into the U.S. dollar instead on anticipation of a relatively more hawkish Fed, which I'll get into in a minute. But here's the important one here. These are the last 2 days of the week, the Thursday and Friday. So here, on the 22nd, the ECB stimulus talk ignited a rally in gold. It came back, but then gold was on the comeback again. The PBOC surprise cuts ignites another rally in gold, as you'd expect. Then what happened? Kaboom! All of a sudden, gold smacked into resistance about 1180 and just rolled right over again and hit down hard and ended up down lower than where it started. What's important about this? This tells me that that perhaps the feeling was that that we've reached maximum dovishness from central banks here, and people are starting to look back the other way, so, and perhaps a swing back the other way. That's what we're seeing in gold action. Gold could be active right throughout the week as the hawks and the doves at various central banks around the world battle it out for control. So keep an eye on gold. Gold has the potential to be extremely active right through the week on all of this news. So I'm going to start with the Fed. The Fed has been sending a lot of mixed signals lately, and I think basically they botched the last meeting. I think the Fed was trying to do what we would call a hawkish hold, where they were going to hold rates but signal a rate increase towards the end of the year. The negative interest rate forecast, which came most likely from Dr. Kocher Lakota, threw a big monkey wrench into that and had the street taking it as a dovish hold. The Fed gets another chance this week to do the hawkish hold and get it right this time. What have we seen from Fed members since the last meeting? They've all been backpedaling. They've all been back on this recurring mantra that's come from Yellen and from Fisher and from Dudley, the big three, and some of the other members as well. There's been some hawkishness and dovishness, but basically the Fed's had this mantra of October's a live meeting. They could still raise interest rates this year. The other thing with the Fed, even when we saw some dovish news, we saw weak non-farm payrolls, and what happened? We started getting Fed members coming out and saying they should discount that, and regardless of whether it's actually true that the employment may slow as they reach full employment, regardless, the Fed's trying to signal there, and then when we had a couple of the permanent Fed members come out with dovish comments, then we started getting the round of comments. Oh well, the Fed's not actually as far off from each other as it might seem. So there does seem to be a trend in the Fed towards raising interest rates this year. Now that being said, it looks like they probably will not raise interest rates this week, and the reason I say that is because there's likely going to be a fiscal crisis in the U.S. over the next month hit again. The Republican leader, John Boehner, is retiring at the end of this week, and he's leaving a bit of a mess behind, because there's three factions among the Republicans that are fighting it out for control, some of whom would be perfectly happy to shut down the government, and some of whom would like to get reelected again, and perhaps even try and win back the White House, and are less keen on upsetting the public at this point in the election cycle, with the primaries only a couple of months away. Their first nominee, potential nominee, stepped aside, and now they're trying to coalesce around Jack Ryan. We'll see if they can do this or not. But here's what's important. The U.S. is about to hit their debt ceiling. It was originally supposed to be late November. The Treasury Secretary Jack Lew moved that up to November 3rd. This week, there's 3 U.S. debt auctions scheduled, one of which has already been canceled in fear that it could push them over the debt limit. So keep an eye on that. That's a big story. But with the U.S. about to hit the debt limit, with other key deadlines on their budget that could lead to a government shutdown or the government running out of money to pay its bills, suffice it to say, there's no way the Fed is going to raise interest rates in that kind of an environment. However, I do expect the Fed to have another go at trying to get it right on the statement and the signaling, and that they'll probably come out with some kind of statement that has a hawkish hold, perhaps more than one dissenter this time around, and indications in the statement that they're still thinking about raising rates this year. What have we had on that? Well, certainly the hawkish leanings at the Fed have propelled the U.S. dollar higher. We'll see if that continues, or if the dollar has fully priced in an initial rate hike. The Fed decision is 2 o'clock Eastern Standard Time, 7 p.m. British Summer Time on Wednesday. Also on Wednesday in the morning, we have an interest rate decision from Sweden, from the Riksbank. Now, what's interesting about Sweden is that the Riksbank has still been talking about being dovish and the possibility of further rate cuts. But over the last month or so since the last meeting, the economic data out of Sweden hasn't been all that bad. It's showing at least signs of stabilizing, if not recovering. And if we look here at the Swedish krona relative to the U.S. dollar, even though the Riksbank has gone into negative interest rates, we can see most of the weakness in the krona came back in the early part of this year. Since for the last 6 months, since April, it's basically been going sideways. Now, in the last week or so, we have seen the U.S. dollar rally relative to the krona, so the krona has weakened, but I have to ask myself how much of this is U.S. dollar strength and how much of this is actually krona weakness. Now, it has broken out here over 850. If we did get a rate cut out of them, probably see another run up into this 880 to 890 area, retest that. If we don't get a rate cut, then we'd probably see it level off somewhere in here, maybe below 860, and perhaps even start to work its way back around. Also on Wednesday, we have an interest rate decision from New Zealand and from the RBNZ. And this is interesting because in 2014 the RBNZ made 4 interest rate hikes, taking it from 2.5 to 3.5. So far this year they've made 3 cuts to go back to 2.75. The question has been, will they make the 4th cut and just give it all back and go right back to 2.5? And could they even go farther down over time? Well, in the last few weeks, the New Zealand data also has suggested the economy doesn't seem to be getting worse anymore. It seems to be stabilizing. Food prices stabilized. PMI data improved a little bit. So there are some signs that the New Zealand economy might be stabilizing. That could take some of the pressure off of the RBNZ to deliver another cut. Now, it's mixed here. There's a certain number of people that think they'll cut again and a certain number of people that think they won't. The consensus is that they won't. They'll just stay at 3 cuts, but who knows? Certainly the Kiwi dollar has been acting better lately. It had a double bottom back here, August, September. It's rallied up. It's been consistently finding support at higher lows, currently trading in the 67 to 69 cent range. If we don't get a cut, we could see it take another rally here. There's 69 here, 70 cent round number, and the 200-day moving average about 70.40. Upside for the Kiwi dollar. If we did get another cut, probably get bashed back to at least 67. This here is 66.25, and down here there's 65 cent level at the 50-day moving average. Upward momentum has been rolling over. It's uncertain whether this is a move from upward to sideways or upward to back downward, but the RBA will probably see a lot of action on that around the RBNZ decision, which is late Wednesday afternoon. It's a couple of hours after the Fed. It's late Wednesday afternoon in North America. It's first thing Thursday morning in New Zealand. Now, the other one, first thing Friday morning in Asia Pacific and Thursday night in North America, is the Bank of Japan decision, which is the last one of the week. And it's also a big one, and it's contentious. There's been a lot of speculation over the last several months that the Bank of Japan could be ready to increase their quantitative easing, their QQE program. So what's intriguing about this is that we're getting mixed signals. If you listen to the Bank of Japan and Governor Kuroda, it sounds like that they're not planning on doing any more stimulus. On the other hand, we've got the Japanese data hasn't been all that great. It's still been sluggish. So I guess the question is the Bank of Japan going to step up like the ECB and the PBOC and stay even with them and in that camp of easing and go for another round? Or are they going to hold the line and say, look, it's the federal government has to pick it up on the fiscal side? Remains to be seen. The consensus estimate from the street is for a 10% increase from 80 trillion a month to 88. Now on the other hand, there's been one Bank of Japan governor running around for the last several months saying they want a 50% cut back to 40. I'm thinking that they'll probably stay the line, but there is the possibility of an increase. If we look at dollar yen here, the street's been quite mixed. It's interesting because we had a double top here, June, August. We had an initial sell-off, which is a rally for the yen. Symmetrical triangle had suggested we would be ready for another decline. Actually, we broke it, and then we've turned higher in the last week as the U.S. dollar has strengthened against everything. So this is a very mixed thing, and we don't usually see a whipsaw where we bust down the bottom of a symmetrical triangle and then blast through the top. This is actually, let me just do that, and then let me expand it here. This is all. Anyway, suffice it to say, this is pretty rare. And what this is showing is that basically there's a lot of indecision. Nobody really has a good handle on where the Bank of Japan is going to grow from here. But we're in about a 118 to 122 trading channel. Which way we blast out of this range will likely depend on what happens at the meeting. So we'll see what happens here. So far, the momentum's pointing upward towards yen weakening, which means people are expecting more QQE out of the Bank of Japan. But if we don't get it, this could reverse in a big hurry. So be ready for some fairly significant trading action in the dollar yen this week. I'm just going to quickly here note also we're still in the middle of earnings season, and we're still seeing a lot of action in stocks around earnings. And something that's been interesting is we've actually seen quite a bit of action in the technology sector. We had very positive earnings out of Microsoft, out of Google, out of Amazon, out of a number of other tech names as well. Citrix comes to mind, and we've had a good pop here recently in the Nasdaq. Now, for stocks, remember, we're now coming out of the weakest time of the year for stocks, heading into what's historically one of the stronger times of the year for stocks, into the end of the year, whether we want to call it the Santa Claus rally, the end of year rally. The point is, November, December historically have been good times for stocks, and it does look as though we're starting to see a turnaround in a number of markets. This is the Nasdaq getting good support out of earnings. We're also seeing here. Let's take a quick peek here at the DAX. And we'll show, look at this, it's double bottom, nice rally, breaking out of the base on the ECB news. Now it is running into a Fibonacci cluster here, up around 10, 850, 870 in this zone here. But basically, it does look like we've got an upswing underway for the DAX, and we're also seeing that in the FTSE. Here, it's also broken out of a downtrend, broken out of a base. I was showing on the Kiwi dollar earlier, and this is the same kind of thing. Look at this, double bottom, rally, consolidation at higher levels, starting to break out again. That's a nice seasonal turnaround there for the UK 100. If we bring up the Chinese indices, which also could pick up. They've been rallying for quite some time. Look at this, massive declines, triple bottom for the Hang Seng, broken out of a base. It's been on its way and could even get more support out of the PBOC decision, because the PBOC news came out after the Asia Pacific markets closed for the weekend. The only one that was still open on a 24-hour trading basis is Japan, and let's take a look and see what it's been doing. Here, it's still climbing. It's been breaking out. And look at this, reverse head and shoulder base for the Nikkei, the Japan 225, breaking out over moving averages and looking like it's starting to work its way back upward as well. One stock chart I wanted to show in particular here is Apple. Apple reports earnings after the close on Tuesday night, after the U.S. markets close. What's significant about Apple is a couple of things. I've done a note on this, but what's important with Apple is that this is one of the best things on this whole platform, is this module linking. You connect make sure you have the same color, and then when you click on it, all the charts change and everything else updates around your chart. This is one of the best things. It's made my job so much easier as an analyst, and it's fabulous for our trading clients. And so what's interesting here, Apple, when we look at it here, was the king of the hill in 2014, not so much 2015. Massive head and shoulders top. We've got a left shoulder here, right shoulder here, in at around 119, 120. We've had a death cross of the moving averages here. Quadruple top, head to the pattern. It's looking as though Apple is rolling over. This is a pretty key earnings report for Apple now, because what have we seen? We've had strong numbers out of Google, strong numbers out of Microsoft. Its competitors are lurking all around it. As with other competitors in the past, the BlackBerries and the Motorola's and the Nokias, everybody's all circling around them, trying to knock them off from king of the hill. And we've got Google's got a new Nexus phone. BlackBerry's coming up with a hybrid phone that mixes Android with the best of Android and the best of BlackBerry. People are out there swirling, going after Apple. Now, what's important was the launch weekend for the iPhone 6s was split between quarters. If people that bought their phones on Friday and Saturday get recorded this quarter, Sunday onward, next quarter. So it's a little hard to gauge how Apple's numbers are going to fall out because of that. But watch this Tuesday night. Apple could be quite active. Also reporting Tuesday night after the close is Twitter. As we know, they've just undergone a CEO change. The company's been struggling. That stock could be very active on earnings news as well. So just to wrap up here, central banks definitely dominating the schedule this week, plus another flood of earnings reports, and it looks like we're up looking for another very active week for trading.